When you just scroll through social media, you'll see that there are a lot of people who swear by the ICT trading strategies, especially when you're trading futures. And for the quest of being open-minded, I've decided to actually put these ICT trading strategies to the test. So in this particular video, we're going to be diving into the ICT concept called the power of three. So I'm going to break down what the power of three is, and we're actually going to take a look at a couple of trades that you could have taken using this concept. So take your pen and paper if you've always wanted to learn and master the power of three, and let's dive in. So what is the power of three? The power of three is a daily market manipulation cycle taught in the ICT framework, which basically captures the concept that the market typically moves in three phases. And the three phases are accumulation, manipulation, and distribution. Now, what typically happens is that a lot of retail traders lose money because they enter during phase 2, which is the manipulation, instead of phase 3, which is the distribution. And hopefully this video will help fix that, because once you understand the three phases, accumulation, manipulation, and distribution, you'll be able to enter during the right phase of the cycle, which you want to enter in phase 3. So accumulation, what typically happens here is that institutions are building positions quietly, right? And you'll find that this normally happens during the Asia session. And then during the manipulation phase, this is where retail traders are trapped, right? And normally that's during the London session right before New York. And then distribution, which normally is the New York session, this is the real move. This is when the real move happens. So having studied the power of three, what I actually like, or at least what I learned from it, is that it teaches you where price is within that cycle. So what you inevitably start doing is you stop fighting smart money and you really start aligning yourself with it, because if you understand those three phases, you're able to enter in at the right phase, which is phase 3, distribution. So just to walk you through the strategy. So phase 1 would be accumulation, which you can also call consolidation, where price is essentially moving between a support and resistance level. Now, what you'll then typically see is that if market makers want to take it up, right, they will come and sweep this liquidity. So this is the manipulation leg, where they come down and act like they're going to take price down. But all they're just doing here is they're just hunting the liquidity that's sitting at this low. So this move to the downside, breaking the consolidation range to the downside, that is the manipulation phase. And then you will see price break through and distribute to the upside. So that is essentially the power of three, where phase 1, you see some consolidation, which is the accumulation phase, right? Phase 2 is this leg where they manipulate, act like price is going in this direction, but all they're doing is they're just coming down to take this liquidity sweep. And then phase 3 is when they actually distribute it to the upside. So we're going to look at an actual scenario in the market on ES where this actually played out. So you can see that price accumulated, right, phase 1 within this range. So essentially during the Tokyo session, price set this high and set this low. And you can see now London is opening. So now let's pay attention to what happens during the London session. So you can see London goes up to the Asia range high, and now it's making a leg down towards the Asia range low, right? Because this is the liquidity. You can see price came down, swept the liquidity, and what did we do? We then went up. So this phase of coming down to the Asia range low and sweeping the liquidity sitting at the Asia range low, that is the manipulation. Because after we swept it, what did we do? We then distributed in the New York session. So if I press play, you can see New York essentially expanded. So you can see this is your phase 1, where we accumulated. This is our phase 2, where we manipulated. And this is our phase 3, which is our distribution. So let's break down each phase one more time. So accumulation usually happens during low volume sessions. So think of Asia session or late New York close or early London pre-move. That is usually where the accumulation happens. price looks very, very boring. It's range bound, right? Between a support and resistance, price is choppy, and there's no real follow through. So those are the characteristics that can help you identify accumulation. Now, the key insight that I get from the accumulation phase is that if price is stuck within that consolidation range, that very, very tight range, it's essentially being prepared for the next move. So the key thing here is you want to then just identify your key levels and just start preparing your game plan so that when you do see phase 2, which is manipulation, you can really get ready for phase 3, which is the big move that you want to play. Now let's go into phase 2, manipulation. This is where most traders lose money. Manipulation typically occurs, based on my experience, around the London Open or close to the New York Open, or right just before a major session expansion. Price will break above a range or break below a range. And in this particular example, you can see that we broke below the range. And that really triggers breakout traders, because a lot of breakout traders will be like, okay, we broke the range, so now we're selling off, right? It also triggers a lot of stop losses, and it also triggers a lot of emotional entries. This is designed to look real, because when you look at this, right, you can see this candle, you're like, okay, oh my goodness, we broke this range to the downside, so we must be selling off. But this is all a setup. And the only job for this particular move is to collect liquidity, not continue selling off. All they're doing here is they're collecting the liquidity that's sitting around here. So the key thing here is to be patient and wait for confirmation to actually see, are we actually continuing to the downside? Because if we don't continue to the downside, then you get your distribution in phase 3. So now take a look. This is phase 3, right? Which is the distribution. And the distribution is really the money phase. After liquidity is taken, price reverses with intention, and now the algorithm actually delivers the true directional move. The key here is not to chase, but you actually want to wait. You want to wait for the trade to be confirmed to say like, okay, we've completed manipulation. Now we're starting to go up. So this is where you'd want to take your entry. And also, by the way, if you're curious about this indicator that I use to mark out the sessions, there's a link in the description as well that takes you to that indicator. So how would you trade this in a practical sense? So in a practical sense, obviously, we've identified the consolidation range. We're looking for price to come and test this all-time high, potentially do a liquidity grab, which would be the manipulation, and then go up. And because price is bullish, I have a bullish sentiment, and I've already identified another previous day high, which is this 695 level, as my potential target. Here's how you could have traded it. So obviously we've identified our Asia range high and low, which was step number 1. And obviously number 2, we're waiting for price to come and do a liquidity raid, either here or here, right? But because I'm already bullish based on the current move in the market, and I've already identified a previous day high that price could target, I'm looking for price to come and manipulate this liquidity at the Asia range low. And then based on that liquidity, I'm looking to write this up. So that's how you could have traded it. Personally, I like to take my entries on a 15-minute time frame. So as you can see, we tapped the Asia range high, and then over here, we did the manipulation. So when we did the manipulation on this particular red candle, this is where I like to switch over to a 15-minute, because what I'll be looking to do is I'll be looking to identify how price moves. So in this particular case, you can see we have this fair value gap, right? We have this fair value gap, and price comes to the fair value gap. And you can see when I drew my rectangle, I have this middle line marked out within the fair value gap. I like to take my entries right there. So in this particular case, I would take my entry right here, use this as my stop loss, and then we can take the move to the upside. Okay, so you can see this is kind of like a 2.3x risk to reward ratio. I'm risking 52 ticks, or in this case, 13 points to target 30 points. So this would be the trade that I would take. So what I did is I would have waited for the manipulation phase. I would have allowed price to come back up, right? Some people like to take this move to the upside. You can, but you also do run the risk that if indeed it's bearish, right, you can get in and then it can be slammed down. So I would want price to go up again. And now that I've identified my fair value gap, I wait for price to come and tap the midpoint of this fair value gap, and that is essentially my entry point based on my entry model. So this is my entry model. And then what I will then do is just wait for price to then do its thing. And as you can see, boom, we hit our profit target. So that's how I would have taken this trade on this particular day. So that is the power of three, ladies and gentlemen. And I hope you found this video useful and helpful. But the power of three is a very, very popular ICT strategy. I've taken a lot of time to really learn, understand, and backtest the strategy. And I've now created a model that I use to trade. If you're interested in learning this model in depth, I do have bootcamp sessions where I teach people about options trading and futures trading twice a month. So the link to my bootcamp is also in the description. And if you found this video very, very helpful, please like and share the video. And in the comment section, let me know what you like about the video and if you have any ICT strategy you'd want me to dive deep into. So I'll see you guys at the top. Thank you for joining.